Dear traders, today the next video and we will talk about what an algorithm is, who and what are the participants in the market, and using an example of how the will and logic of the algorithm is executed. Now let's take a look at my screen. So, the theme is market participants, who are you going to trade against, knowledge base and algorithm. So, first of all, algorithm is a step-by-step instruction. Why, what, how and when you make a trade. Why is everything so complicated? You ask me. Why write something? After all, the Romans said, came, saw, conquered, veni, vidi, vici. But the Romans had a strict structure, discipline and thoughtful steps of action. And he came, saw and won after a deliberate plan of action. Take a look at this picture. All these guys are doing the market. Do you think an untrained trader can take the jackpot from these business sharks? You must always understand the questions. Who are you trading against? Who do you want to take your profit from? So, commercial banks, firms engaged in foreign trade operations, central banks, currency exchanges, foreign exchange broker firms, individual, including trained professional traders. Let's take a closer look at each of the participants. For commercial banks, the main task is in foreign exchange trading is to ensure liquidity of their own funds and fulfill client orders. For example, when it comes to orders from exporters and importers. Enterprises with a legal entity in one country but operating in another are forced to change their national currency to the currency of the country in which they operate. Of course, you know examples of Alibaba, Coca-Cola Company, McDonald's, Procter & Gamble, Google, Apple, Intel, etc. It is this volume for them that commercial banks carry out, and this volume can be up to 2/3. The largest international banks have the greatest influence: Deutsche Bank, Barclays Bank, Union Bank of Switzerland, Citibank, Chase Manhattan Bank and others. It is clear that with the understanding and knowledge of current applications, they clearly do not intend to remain in the red. So, whoever is bigger is right, and the private trader has to recognize where the large volume market is going to go. Next, firms engaged in foreign trade operations. These are the companies participating in international trade and presenting a steady demand for foreign currency, as well as placing their free funds in short-term deposits. It is precisely the difference in interest rates or negative interest rates that can induce to look for deposits that bring a plus and do not wash out capital. So, currency traders also pay close attention to the interest rates of the countries of the world. At the same time, when placing on deposits, it is also important to assess the rating of the countries of placement, since for a high interest rate in developing country, you can bear potential high risks. So, profitability is often the price of risk. There are companies that carry out foreign investments of asset investment fund money market fund, international corporations. Such companies carry out diversified placement of assets, not disdaining to part of the capital and taking risks in investment in developing countries, receiving higher returns on this share of capital. It all comes from risks and portfolio balancing between conservative and aggressive asset classes. For example, the well-known funds of George Soros, Quantum, and his worldwide fame on the deal against the pound sterling are heard. Next, central banks. Although not so often, it happens that the central bank have to carry out foreign exchange interventions. The goal is stability of the exchange rate in accordance with country's monetary policy. In general, the regulator's most important task to prevent sharp jumps in the national currency rate. Such jumps in the national currency can cause mistrust on the part of investors and their flight to the safe haven. The Federal Reserve System has the greatest influence on the world currency market. The US dollar, as a reserve currency and the largest in terms of trading volume, is central to this forex market, with major trading being held on ECB, EBS, and Reuters. Also, the European Central Bank, every time the attention is riveted on the ECB press conference and decisions on interest rates and the Bank of England. Currency exchanges. A number of countries with economies in transition, developing countries, operate currency exchanges. Their function is to carry out currency exchange for legal entities and to form the market exchange rate. In this case, the state usually actively regulates the level of the exchange rate, taking advantage of the compactness of the exchange market. But in developing countries, cases of invocative growth in inflation and devaluation of the national currency are not uncommon. Foreign exchange broker firms. The task of the brokerage firm is to bring together the buyer and seller of foreign currency. A brokerage firm is an intermediary between a client and the currency market. For their mediation, brokerage firm receive a brokerage commission as a percentage of the transaction amount. Here is the structure of how it looks schematically. You see here retail traders, forex brokers, and then major banks, central banks. Private persons. We can talk about private persons and individuals for a long time, and from the standpoint of preparedness and the risk they bear, especially when trading with high leverage. In reality, it turns out that the majority of private traders on the market are simple gamblers, like in a casino, getting adrenaline from every transaction. But the one who has a high level of trading and understanding of the market and shows a stable result of profits and is a professional foreign exchange trader. It is worth noting that 90% till 95% of the main volume falls on the world's largest commercial banks. So, whoever knows how to read the intentions of large capital or smart money ends up at the top of Olympus. But back to the algorithm. First of all, you must determine for yourself preparing time, trading time, analysis time. What are you trading? Idea. What is your advantage? If there is no advantage in your trading system, then you are doomed. What is your goal in the market? Game and adrenaline or professional development? So you need to decide. As I said, many private traders come to the market without even realizing that they are just playing and there is nothing to do with making money professionally. Casino and no more. I will give an example of a transaction as a trader follows the algorithm step by step. First, preparation, search for ideas, suitable trading instruments that a trader can read in terms of probability. Further, the expectation of favorable technical situation. Estimation of volatility, potential and local entry point with the highest degree of probability. So, first search for a suitable trading instrument. Here you see the crude oil of the brand WTI is globally in a strong uptrend, passing the level of 51.38 and may well reach the point from which sales were made. I can show you. Whether this tool is suitable is already worth looking at a little more locally. Daily chart. Powerful upward trend, but the disadvantage is that the instrument has been growing for 4 days. In such cases, the statistical probability of correction is high, but the instrument gets on the trading list because of the pullback on the 5th day. Now the tool, this instrument, is on the sheet, and it is important for us that the local picture fits. The next point of the algorithm is to assess the possibility of a deal. We see that locally oil is rolling back to the level of consolidation. I mark it. Breakdown of 51.63 does not lead to sales. Here you see it, which is typical for such a move. Buying on a return to the 51.63 level, which is interesting from the position of the stop loss relative to the instrument's volatility. That is, you can count on a goal in a couple of days. This is followed by maintaining the position, adding 25% to a position and fixing a 7-fold profit in relation to risk. It is very important to know your statistics of the percentage of positive transactions and assess the required potential for each transaction and in total. But we will talk about this in the video about the mathematics of the trading system. So, it follows the distribution impulse and you take the money off the table. The statistical potential has been realized with a large margin. The instrument is globally depleted, and we know the statistical side of distribution, where the risks become high, and in this case, the additional part is closed. The total ratio of the received profit in relation to the risk is 10-fold. As you can see, the whole deal is permitted with logic. Only understanding the advantages gives you a chance to succeed the market. And for this, an algorithm must be written what, when, and why you do. What is your advantage? So, hope you found this video helpful. We will meet soon at the next important trading section. See you.